Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, and when you tune into my show, you're going to hear about topics that are important to the home business community. Okay, so as of this recording, the Congress has passed an extenders bill. So let me give you an idea of what this looks like. Just about every December for the last few years, Congress has gotten themselves in gear and decide if they're going to extend, if they're going to extend things in taxes, tax credits or tax deductions, if they're going to make some changes. We just had the Tax Cuts and Jobs Act this past filing season for 2019 was our first season under the Tax Cuts and Jobs Act. That was time for folks to basically see how stuff was working out, stuff that they needed to fix and all of that stuff, right? So here we are now where we have the extenders bill. So I want to just cover that briefly this morning because there are some things in here that you need to know that are coming up for changes. And and again, as for for tax professionals, when Congress makes these last minute changes, y'all saw it in early 2019 where they were in January saying, okay, we're going to make this effective for 2018. So the tax software developers had not even had time to write the programming for tax software that was already out. So this is why as tax professionals, we have to stay up on these things to know if we need to hold off on filing our clients' taxes until, software developers catch up, or you got to know how to fix it yourself or know if your software is not doing it. Okay. And the filing season for 2019 that's the reason it was a disaster, because there were so many changes that were coming down and software developers really did not have time to write the programming to match what the laws were changing to. And there were a lot of tax professionals that did not catch that their software wasn't actually calculating specific deductions right. It was crazy. I will admit it was a crazy, crazy year. So now here we are again. And there's some extenders. So let's talk about a few of them. Okay. So number one, the medical expenses deduction. Now, one of the things let me say about the medical expenses deduction is if you are not itemizing, you will not see this. Okay. But they have, so at one point, the floor was 7.5%. You can deduct everything above your 7.5% of your AGI. Then it jumped back up to 10%, a 10% floor. Now it's being returned to a 7.5% floor for 2019 and 2020. Okay. So for 2018, now let me also say this, that there's a lot of information in this bill. I think it's over 700 pages long or something crazy like that. But there are some of these things that will also be made retroactive. So I'll have to find out more on that. But for things that are going to be retroactive, one of the decisions that you have to make as a taxpayer is, is it worth it for you to go back and amend to get whatever? Okay. It just is what it is. Okay, so the medical expense deduction will be have a 7.5% floor for 2019 and 2020. Now, this one I'm super excited about. The qualified tuition and related expenses deduction is coming back and it's going to be extended through 2020. So I'm super excited about that. So for college tuition, you have the lifetime learning credit, you have the American Opportunity credit, and now you have the qualified tuition and related expenses deduction. So glad to see that's going to be coming back. The employer credit for paid family and medical leave and the work opportunity credit were supposed to expire in 2019, but those have also been renewed to go through 2020. The indebtedness related to your qualified principal residence. Okay, so there was a lot of back and forth on this. So let me explain this one really quickly. So at one point, let's say this period. If you have debt that is forgiven, that's over $600, then you will get a 1099-C. And that forgiven debt is generally counted as income. But because we had the whole big thing with the housing crash and all of that stuff, indebtedness related to a qualified principal residence was then not counted as income. Okay. And so you think about how that looks. So if you default on a loan, your house is foreclosed on or whatever, then you suddenly get this 1099-C for, let's say, $200,000 that you did not pay on your mortgage, and then you owe taxes on that $200,000. Okay, that is not cute, right? And so that's why this this exclusion, to be able to exclude any indebtedness that is related to a principal residence, that's why it helped so many people, because then they did not have to pay taxes on that money. Well, that then expired. And then there was, it expired. They fixed it. It expired, you guys. It really was an absolute mess. And so now it expired in 2017, but that has been renewed. I don't know if it's going to be retroactive or not. So I have to definitely follow up on that. And that's something for you to look out for as well, is if this was you, right? If you had a principal residence and it was, and you lost your home, whether it's, lost your job or whatever, and you wound up losing your home. And if that was then counted as income, then you need to be watching to make sure that this particular thing was not made retroactive, because if it was, then you may be able to go back and get your money back. Okay. This is why you have tax professionals in your life. Okay. I'm just saying. Okay. In a previous video, I talked about the Secure Act. I'll review that briefly. The Secure Act really had a lot to do, well, it was based on retirement, okay? It was listen, y'all, it is called the Setting Every Community Up for Retirement Enhancement Act of 2019, the Secure Act. Whoo, child. Okay, so it increased the required minimum distribution age from 70 and a half to 72. So you can wait a little bit longer. It also allows part-time workers to participate in 401k plans. This is really huge, especially for women, because the majority of the part-time workforce is women. And so women have not been able really to participate in these plans. And so now with this change, women that work part-time will be able to start saving for retirement. So I think that's very cool. Also, for new parents, the Secure Act will allow new parents to take a penalty-free distribution from their 401k within a year after birth or adoption. Now, it says qualified birth. I don't know what the qualified birth means, but now it's penalty-free does not mean it is income tax-free. Please do not confuse the two. So there's still some changes that are going, y'all. Like I said, it's 700 pages long. Right now, that's as far as I've gotten, all right, to see what's going on, because there are a lot of other things, in this bill that, it spans across all industries. One of the main things that I look for when I'm reviewing these bills and such is when they're slipping in stuff for taxes. And just as an example, in the Secure Act, it raised the failure to file penalty from $210 to $400. You just slid that in there, right? So yeah, that's why I want to take some time to really read this and see what's in there that's not making the headlines, because that is what's going to impact you as well. Okay. So that's it so far, you guys. As soon as I read some more of this stuff and find out some yummy stuff, of course, I'm going to come back and tell y'all so you can be ready when you file. But yeah, just be watching, though, especially for the things that impact you and your income taxes. I know the qualified tuition and related expense deduction, that really impacted a lot of people last year that had expenses that they couldn't deduct from their taxes. So hopefully that will be retroactive as well. But once I find out about these dates, you guys, I will let you all know. So that's it for today's episode of Home Biz Tax Talk. Again, we air Monday through Friday, and you can come right here to get your questions answered about your home business taxes. All right, have a great day, and I will see you all next time. Bye.